Good evening, traders. This is Michael here with ARM Capital. We got another week of our market outlook and overview and break down some of these things going into next week for you guys. Take a little bit of an overview of last week, shall we? We had a pretty good last week. We're getting right back on track, continuing our 6-win streak the previous week, and now we were 7 for 8 this week. Initially, we had a losing trade on the Qs, trying to short it, but that was a false breakout to the downside, ended up expiring worthless, but that's all right. The next 7 trades were great. We had 2 on Qs, we had 2 on SPY, all calls, by the way, this week. The VIX was below 18, so we were moderately bullish to sideways. We also traded JPM and McDonald's to the upside. So we'll take a couple of looks at this going forward. We have a big earnings week coming up, which is what we're going to be diving into later. I mean, all the indices were up for the week, between 1% and 1.5% year to date, 6%. Still want to iterate that we're still in a bear rally right now, and the only reason year to date we're up 6% is because the bottom was literally at the new year. Even though we are up 6%, it's still not cleared the rally. We're still about 5 to 10 points on some of these indices before we can really break that downtrend. So still cautious this week, but there's some potential out there. Dow Jones, what can you say? I mean, you reached your lower support last week that we went over. A little bit of a continuation. We'll see how it reacts to this 200-day moving average. Right now we see a little bit of a hammer, so we'll see if that continues downside or if that's just another continuation upwards like a couple of these last ones have been. Same chart for SPY for the most part, right breaching this 265, 266 level. Something that we're watching with earnings coming up this week. A lot of players we want to see are reporting. And although some companies have lowered their guidance, we have to take that into consideration. If we see everyone beating, that's good. But it's also, if it's on revised projections, then maybe it's not so good. That's just more financial engineering in the works. So we're taking a look at what companies have stuck out their projections and forward guidance and which ones are lowered and are lowering them in the future to kind of see if there's a divergence between those two groups of companies. QQQ, right now we're in the middle of this range. Still don't have a decisive move going forward or backwards, but we're now above the 50 and 20-day moving average, which gives a little bit of good sentiment. We'll see how tech performs this earnings season, but in our view, we think that there's sideways to downward action on tech specifically, but that's more due to more of the big players lowering forward guidance last quarter, like Apple and AMD and NVIDIA, saying sales have been slowing of semiconductors. So that's kind of what we're looking at with the tech sector right now. Moving on. Potential outcomes for this week. Most likely, most companies beat the lower estimates and markets stay stagnant, moderately bullish. We don't see too much crazy action. Within the specific stocks, you might see some swings, but in the overall sectors, we think it will be pretty calm. Less likely, most earnings are missed, and we see a big correction to the downside. That could be a sharp move, but we don't think that it's that viable just due to most companies being proactive in lowering their forward guidance to kind of absorb that shock to the markets, as we like to call, who are good at financial engineering from their balance sheets. VIX, we're still descending. Another reason we think there's little weight to us going down this week, or at least sharply down. We're well below the 20 level that we can track. We're at 17.42, and it's been declining the entire week for the most part, just because we've been bullish. There's been little volatility in the markets. Haven't had that much political headline risk because the government's shut down, which we thought actually was a bad thing, but I mean the markets are responding pretty well to it, so we're taking that as a little learning data point that we're going to integrate into some other things that we're doing in the future. All right, Earnings Whisperers does a great presentation of what is going out for the week in a real condensed state. You got basically Monday through Friday before an open close. We've underlined what we're looking at specifically. These are the only ones that we even think about trading. Everything else we don't trade just due to option liquidity or volume is too low. So Monday, we're going to probably see this right before the market opens, probably about 15 to 30 minutes beforehand. Caterpillar, we want to see what they are doing. They are huge in industrial machines, so with this global slowdown in growth happening, we want to see how sharply these react. Home Depot's another great one to look at for specifically the U.S. housing market. If it's being propped up with builders, or if there's a lot of contracts that are still open and not been closed and started to lift up those structures. So Caterpillar, we're looking for a little bit of a downside on there if some of these global concerns are baked into the market, or if we'll see that with their earnings. Going on to Tuesday is a little bit bigger of a day. We got Verizon. We'll look at all these charts right after, just going over the basic overview right now. Verizon, Apple, AMD. We're looking at levels on Verizon and Apple. AMD is not in the range that we're trading right now, but we'll keep an eye on it. It's a long-term buy for us, under $20. And we picked up shares a couple weeks ago, maybe a month ago, on those as well. All right, on Wednesday, Alibaba, on the best range for us. We'll look at that in a little bit, but also something that we're going to keep watching just because of the China trade war. Boeing, great, right above its upper range for the year. We're going to see if we can do something bullish on that. If it has a good earnings report, I believe that they actually increased their forward guidance last week, as opposed to most companies decreasing their projections. So another strong stock that we're going to be looking at. Facebook, we want to. Personally, as our company, we have a bias. We don't like Facebook as a tech company. They violate a lot of privacy concerns to our part, so we like taking their short side on that. We don't trade it much, but it's a pretty good level. We'll show you going forward. We're pretty confident, and maybe even a little morally confident that we can take that down a little bit. Microsoft, it's not in a really good tradable range, but as I believe it's still the biggest company in the U.S. markets. We'll take a look at it as well. AT&T, another soft play. Utilities, if we think there's going to be more downside, this is a place that we have to watch. McDonald's, something that we've been playing to the upside recently, and I believe last week on Thursday or Friday it kind of dumped off a little bit, so it's established a double top resistance that we will be looking at, and if it breaches, we'll be going long again. And Thursday, Friday, not too much. We're just more looking at what kind of happens with Amazon. We're more curious based on more of the personal stuff that's been exposed in the last couple of weeks, and seeing how their earnings report reacts to what their numbers are this week. If they're going to break off and the Bezos are going to be doing their own thing, is the stock price going to be affected by that, or is that company so efficient and well built that a personal relationship won't have any effect on it? Not really a play we will put money on, something that we're watching. And then we're always watching the oil market, so we'll look at Exxon and Chevron, kind of see what the global stance is. All right. Sector recap. Not really much to recap on this, to be honest. Kind of the same as last week. It's all in more of a bear rally. You're seeing some of the big guys get hit a little bit, which everyone was positive last week. So a little bit of change to that, but for the month, since the time of the last dump off at the end of December, we were all positive in all sectors. Hard to really take one over the other. Most of the charts look similar. So that's kind of where we're at right now. Nothing to report on crypto. Bitcoin hasn't been doing anything, so we're just kind of going to skip all over that. Charts here. Right. SPY coming up to that. What is that, 170 level? So we're looking for a clean break through that and close on the hourly, or we're looking for a firm rejection, maybe a shadow breaking above support, coming back down, and then maybe riding that back down to kind of capture some of the downside back to 260. We're probably going to shoot like 3 or 4 points if those situations pan out. All right. Still below, it's the 100-day moving average and the resistance here at 170. High risk right here. It could reverse it in a second or break through. Wait for a break above 170. Or break below 160. This is going to be heavily dependent on earnings. So those are the two levels we're keeping an eye on for the indices. This week we're playing more stock indices just because it's earnings week and we have more play on specific stocks and not in the sectors. So this is what I was talking about with McDonald's. Got this nasty, you got this double top over here at 190, comes back up to it and just tanks right back down. So what we're looking at right now, if we hold 178 and we reverse back up, we'll take upside. If we break above 190, we'll take upside. We're not looking to play this to the downside. So if we're bullish in SYQQQ and staying below 170, we're not touching it. That's what our positioning is. Caterpillar. We're looking for the downside here. We want to see a break below this 130. That's what we're looking at right now. It's above its resistance support, and it's also above its swing averages on the daily. So it's got some heat going upwards, but this is something weird specifically for a downwards play. So just kind of where we're at. Verizon, AT&T, we just keep watching, especially if we start going back into a bear. We'll see these pop. Volatility keeps going down, and then they start to rally, or we see some, beating of expectations that weren't lowered. We could see this. So we're watching this 55 level, but probably not something we're going to be actionable this week, but just an indicator that we're watching. Good old Apple coming up next. I'm able to do a little bit, but we're seeing a potential long trade on here. If we can break down 155.8, 159, we think there's a little bit more upside, probably right around this 165 level. We'll probably try to get about 162, try to get a $4 move in that. That would be prime for us. They did lower their guidance last quarter, so if they miss their lower revisions, this could be the only reason we have our lower threshold alert here, and we'll reassess if it does get breached. AMD, like I was saying before, it's not really in range that we are trading. So we're going to take a look. Still above the 100, still within this range. You might be able to take some upside. Still kind of $3 away. We're probably not going to get to that, this week unless they just kill earnings and they just skyrocket up. They might be able to get $3 or $4, but probably something we'll be looking at next week and going forward. Not too much that we're going to play on it right now, though. So short this to the ground. Coming up right near its resistance level at 150, 152. Turned around, trying to make a reapproach to it here. So we're looking to take some downside, especially if we have any indication that the earnings have missed or that the price action is south. Even if they beat, we will be jumping on that bandwagon. BABA. Hard to trade this right now. You're not at the top of your range. Yeah, this is a trade going to south. Any political headline risk that we have a potential solution to the trade war, which is becoming more and more almost necessary due to what's happening to both the U.S. economy and the Chinese economy, with our government being shut down, their market being devalued just because the trade limitations that we've forced onto them. I don't want to blame them for that. It's more the U.S. than China, but they also protect our IP rights, so that's why we're being such hardball right now. But something we love for the bullish side. Right on this upper range, we reach this 370 level. We'll take it to 380. Well, we'll try to get about $10. Let's move. Got about 25 to the last peak, so we think that's very reasonable. If we do want to see some volume kick on this, but definitely something we will be heavily watching this week. Microsoft, there's not that much that we can really do here with Microsoft. Still below a couple different resistance points, hasn't broken down below support, in between its moving averages. Just not something you want to put your money on, in our opinion. If we see a downtick in the earnings for oil companies, or just inventory starts to build up again, we see a little more sell-off on some of these oil tycoons that have been recovering quite nicely until about the last week, where they've been starting to consolidate. So another leg down, we're happy to take some downside on that. So we want to sell level probably right on this. We'll go south on here. We probably won't take it to the upside. I'll see a little bit more confirmation due to the current state of the oil markets, but that's kind of just our view on things. Yours might be a little bit different, but that's what we're looking at. So hope you guys all have a great week trading. Stay safe, limit your risk, and we'll catch you next week and see how things go from there. All right, guys, this is Michael signing off. I'll talk to you later.